This is the Reporter's Notebook, hosted by Elaine Shane.
Welcome to this entry in the DTN Reporter's Notebook. DTN Markets editor Katie Meisick joins us today as we look at the latest results of the DTN, the Progressive Farmer Ag Confidence Index survey. Katie, can you briefly tell us how the survey was done and the index determined?
Sure, Elaine. Every year, DTN surveys 500 farmers from across the country before planting, before harvest, and then after harvest to gauge their sentiment towards the agriculture economy at different critical points during the crop year. This year we did our surveys in the middle of August, and we got a pretty interesting response, let me say, to our survey.
So what was the results of this pre-harvest index survey?
The overall survey index came in at 99.8, which with our methodology, it's below 100, which is our neutral number. It's just slightly below it, but it's the first time in 4 years of conducting this survey that we've had a number that registers in the pessimistic range of what we survey for. And so what it tells us is that a lot of producers out there aren't happy with the current agriculture economics, with crop prices and all of the other factors that go into farming.
Now for the index, you talk both to farmers and to businesses, but let's break it down on the farmer end of it. What was some of the highlights of what they said?
I think the biggest and most distinct thing that showed up in this index was the real divergence in attitudes between crop producers and livestock producers. And we create separate indexes for those groups as well, because we break it down by regions and by sectors. And what we found was that crop producers' overall index was 96.3. That was a lot lower than even our average. And a lot of that was due to sort of a pessimistic view of the future. They're feeling okay right now, but they don't see much on the horizon. And then when we look at the livestock side, we had a total index score of 108.7, which is clearly above 100. It shows they're feeling pretty good about where they're at right now. Although it's interesting to note they don't feel as good as they did last spring.
What about on the business side? What were some of the highlights you saw there?
Well, on the business side, they're overall still pretty positive. That index is at 106. And for that survey, we survey 100 businesses from across the country and try and get a good spread of co-ops and equipment dealers, chemical companies, crop insurance agents, banks, a wide range of people that serve farmers as their primary business. And so with 106.1, that's still in the positive territory. What I've noticed is that since March of 2013, when we first started to expect decent-sized crops after that 2012 disaster, businesses have been fairly consistent. They've been positive, they haven't been exuberant. They've been in sort of the 102 to 108 range. So this seems to be sort of a new normal for the agribusinesses that are out there.
Now you do interviews with some of these people to get sort of past the statistics. What were some of the things you heard from farmers as well as businesses on how they're feeling, but also what they're going to be doing for the year ahead?
We heard some very interesting things this time, Elaine. Let's start with livestock. The livestock producers that I spoke to really are feeling quite good. One of them was a cattle, hog, and grain grower in Washington County, Iowa. All the grain they raise, they feed to their cattle and their hogs. And what he was saying was it's not as bright as it was last spring because they've got this concern about the PED virus hanging over the hog business. They don't know, since that's a cold weather virus, if it's going to come back with a vengeance or if some of the biosecurity measures are going to keep that from spreading. On the cattle side, he's sold some fat cattle at pretty good prices just this past week, but he also noted that last winter was really severe and that caused them to not really perform the way he wanted. He's got a great calf crop on hand where he says they're even, they calved really well, they look good, and he's just concerned about the weather going ahead. So while he's still very optimistic because corn prices have come down, they'll be able to feed them everything from the farm. His corn yields are good, so he may not have to buy as much from the outside market. If he does, it's not a bad price. He's got some things weighing on his mind, still very positive. Crop producers tend to have a very different thought process because they are trying to say, okay, corn prices have fallen from their highs. We are now in the mid $3 range, and it's something that's below a lot of farmers' break-evens. And they are starting to think about things like income, which is going to be down from last year. Our survey showed that there are a lot of, most farmers said they thought it would be good to normal. 85% fell in that range. Some thought this year would be bad, but they look ahead to next year. And, a lot of farmers expect it to stay the same. That's about half, or get worse, which was about 35%. So there's sort of this real downward shift in what crop producers are expecting for income. And so what that's doing is they're starting to ask themselves questions about where they can cut back. What can we save on? The things that the producers I talk to, number one off their list is machinery. They've had some good years and updated, so they're going to be fine there. They can maybe postpone on updating their machinery. When it comes to crop inputs, though, they're a little bit more hesitant. A lot of the producers that we talk to are very wary about doing anything that will reduce their yields. In a year like this one, where prices are low, farmers make their money on bushels, so they want to maximize bushels while minimizing their inputs, and that's a really fine balancing act that farmers have to go to. One farmer said he doesn't want to save himself poor, and that's kind of an interesting thought. One of the other things I picked up was that a lot of farmers are thinking about switching to soybeans next year or moving some row crop land into hay just to cut back on some of the input costs. It's something that the market's there, although soybeans have another long run issue coming up with possibly a 4 billion bushel crop, maybe 3.8 billion bushels coming in this year, plus South America, because they will grow more beans than corn. So there are some questions on the long-term soybean picture, but for right now, for farmers who are trying to manage their input costs, that's a top thought in their mind.
One last question. In some of the surveys done in the past, weather played a role, usually drought. Did drought or heavy rains play any role this year?
We didn't see a huge amount in it this year, and I think a lot of it's just because this crop is going to be big. There were some late concerns about heavy rains in August, but overall the weather has been very favorable for this crop and for making it a big crop, and so I think the bigger concerns are really about the ending stocks and the supply and demand situation going forward.
Thanks, Katie.
Thank you, Elaine.
You can see more on our survey by going to the link on your screen. With Katie Micek, I'm Elaine Shane, and that's today's entry in the DTN Reporter's Notebook. Thanks for joining us.
This has been the Reporter's Notebook from the DTN Progressive Farmer Newsroom.